Hey there, folks. Chris Hobart here, the Wealthologist, and I've got a question for you. Did anyone else have trouble this year with their college football bracket? Maybe getting completely destroyed this year? I, for those of you paying attention, there were 5 automatic berth teams, and the top 2 ranked teams were out, and Ohio won. So, it's like someone took the rule book and set it on fire, right? Now, if you thought predicting college football this year was tough, well, I got a story for you. Forecasting the economy and the stock market or even elections makes football predictions, well, quite frankly, look like child's play. But here we are, kicking off 2025. Just had the inauguration this week, trying to make sense of it all. So grab your coffee, or maybe something a little bit stronger, and let's dive into what's happening and what it means for you. All right. I want to start with the economy, right? Here's the deal. Almost every Wall Street firm got their predictions for 2024 wrong. Absolutely wrong. The S&P 500 ended the year way higher than anyone expected. All those recession forecasts, they didn't happen. Inflation, well, it stopped improving as well. And even the Federal Reserve had to backpedal on how much they'd cut interest rates in 2025. Now, this kind of sounds like chaos, right? Well, it kind of is. And here's the kicker. 2025 isn't shaping up to be any easier to predict. So I want to break it down for you. First, government spending. The U.S. has been running massive $2 trillion deficits for 2 years in a row. It's kind of like we've been, living on economic morphine, a stimulus money propping everything up. But now, with the new Trump administration aiming to slash spending by up to $2 trillion, that morphine, it might wear off. And when it does, we could be looking at a recession. Not a deep one, but enough of a recession to feel the pain. Now, how about the job market? Well, here's a fun fact. Half of all job growth over the past 2 years, it came from the government and healthcare jobs. So, if government spending slows as anticipated, where are the new jobs going to come from? Now, that's a pretty big question mark. What about taxes and tariffs? Well, the Trump administration, it's talking about extending the 2017 tax cuts and maybe even cutting rates further. Now, that sounds great for your paycheck, no doubt. But we've always got to ask, how is that going to impact the bigger picture, like deficits and our economic growth? And I want you not to forget the potential return of tariffs and tighter immigration policies. Those could shake things up even more. But I do have one big bright spot, the money supply. Even if government spending slows, the Treasury's still sitting on a fat $750 billion checking account at the Fed. Now, when that money gets spent, well, that's going to boost the money supply and keep the wheels turning a bit. Well, you're probably asking about inflation, though, right? Yeah, it's not going away entirely. We're expecting it to hover between 2.5 and 3% this year. And let's not forget interest rates. The 10-year Treasury yield probably won't dip below 4%. So if you're looking to borrow money, it's still going to be pretty darn pricey. Well, let's talk about the stock market and how all this begins to impact the stock market. Right now, the S&P looks overvalued maybe by about 20%. So you're probably wondering, is it going to crash? Yeah, potentially, but probably not, because there's crazy hype around AI and new satellite tech and even Ozempic. Yes, the diabetes drug that's become a weight loss sensation is making waves in the stock market, as well as the song market at my house. I can't tell you, my kids sing the Ozempic theme song nonstop, it seems like. This is wild, right? But still, don't count on another year of 20% plus gains. Our forecast, it's that the S&P is going to end 2025 somewhere between about 5,000 and 5,400, which isn't bad, but it's also nothing to write home about either. And then we've got to talk about politics. Trump's victory is shaking things up, no question about it. Not just here in the U.S., but around the world. Countries like Canada and France and Germany and the U.K., they're feeling that ripple effect. Now, here at home, less regulation could be a long-term win for growth, but short-term, cutting deficits might slow things down. And globally, China's struggling economically will stir things up geopolitically. But one thing's clear. If the U.S. can get its fiscal house in order and project strength, it could stabilize things on the world stage. And quite frankly, that's good news for everybody. But I want to be real here. The U.S. still has to pay the price for some of the maybe less than stellar policies of the past couple of years. And 2025, it might just be the year we pay that price. Let's think of it like ripping off the Band-Aid, right? It's going to hurt, but it's also necessary. So, what's the key takeaway here? 2025 is shaping up to be a wild ride, no question about it. There's a lot of uncertainty in the economy, the markets, and politics. But here's the thing, uncertainty doesn't have to mean panic. It just means that it's time to stay informed, stay flexible, and to keep your eye on the big picture. Now, I want to hear from you. Do you think that the U.S. can rip the Band-Aid off and tackle the big economic challenges ahead without triggering a major recession? Drop your thoughts in the comments below. I'd love to hear your take, and maybe we can have a little bit of back and forth on this. And if you want to stay ahead of the curve, hit that like button, subscribe to the channel, and share this video with your friends. Let's tackle 2025 together, one play at a time. And now until next time, I'm Chris Hobart, the Wealthologist. Stay wealthy, my friends, and have a great rest of your week.